Hey everybody, welcome back to Convergence Knowledge Bytes, where we take complex business topics and break them down into bite-sized chunks. That's bite with a Y for business owners and leaders to make better decisions about how to move their companies forward. And today's topic, a very interesting one and very personal to me, is insurance. The various different kinds and types and lines of coverage that businesses need. And one of our favorite partners in the region, LaPorte Insurance, and we have Zebadiah Wade here with us today. Looks like we've got an interesting set of questions to go through about LaPorte, but do a quick intro for yourself for the audience, Zeb.
Sure. Well, happy to be here. Appreciate the opportunity.
Yeah.
My background's kind of a unique corporate finance guy by trade. Stepped into the insurance world because it's a very great place to be, but two, it's a challenging spot. And with my understanding of a P&L and balance sheet, I get the opportunity to look at insurance from a different perspective. So it's a
Yeah.
lot of fun.
Yeah, it's very cool. Well, I want to jump right in because insurance is really broad. There's a lot to cover today. And so, at a high level, though, just for those who are sort of watching and or listening, the range of insurance services that LaPorte offers to its clients, it's pretty broad.
It's everything from your personal lines, which would be home and auto, all the way up to complex multi-state business risk. Uh,
Mm-hmm.
we do employee benefits, the commercial liability side, the property side, and then we do a fair amount of the self-insurance side as well.
Yeah, I've heard a little bit more and more about self-insuring in the past couple of years. It's an interesting topic. How does Laporte help organizations though with like the risk management and compliance side when it comes to that? How do those intersect between
Sure.
insurance and risk management and compliance?
Yeah, so compliance can be a lot of different things. So depending on the type of contract that someone signs,
Mm-hmm.
depending on the federal requirements around benefits, depending on any sort of project that you're doing for a state municipality, there's all types of different compliance requirements. Our job is to make sure that you are within compliance. So
Mm-hmm.
typically what we request is that you send, a copy of those contracts and we go through the due diligence to make sure that if you don't have that coverage, we go obtain it and make a business decision on, do we want to spend the money for that? Does it make sense? Or we
Mm-hmm.
go negotiate on your behalf and go, beat down the large GC or whoever it is and say, no, this is unreasonable. We're not going to do that.
Yeah.
Um, but it also depends, there's certain things you can't get around where you got to do certain filings for employee benefits. There's no way around those 5500s and things of that sort.
Yeah, that makes sense. A little different than the compliance that we do, but all still very the same. If you have a contract with an organization that says we will follow X, Y, and Z criteria as part of this engagement, a lot of times our contracts, it's, what is the coverage limits that you have to have, right, from a cyber insurance standpoint. But before we dive into that, we'll use that for episodes a little bit later. Can you talk about the what types of employee benefits programs that LaPorte provides to organizations? So there's kind of the standards, but then you also have this other one where you have a self-insurance model that I've heard about.
Sure. Yeah, well, on that, I would say there's three different kind of worlds. There's the standard where let's go to market, let's go ask, and if you're a small group, you're dictated based off the small group. There's nothing we can do.
Mm-hmm.
But there's this world of association plans. So
Mm-hmm.
we manage and run multiple association plans. So depending on the industry and what you're doing,
Mm-hmm.
we're able to pool all of those employees together to obtain a large group rate, which can be very, very advantageous. Um, and then there's this world, as you mentioned, of self-insurance, which to me is a very fascinating space. Something that many people may not know, but you've probably seen that in the Forbes 50, right? A lot of them are insurance companies. Well, why?
Yeah.
The reason why is that for 30 to 40% of the cost of premiums are just administrative costs. So
Mm.
when you pay your medical bill, well, 40% of that's going for the overhead of that insurance company, not actually for the care.
Mm.
And so a partner of mine, actually right next door, he's become an industry leader around how do we build self-performing, high-performing insurance plans. What these look like is, instead of having one group that we're going to go to for everything from pharmacy to care to physicians, etc., we're going to go and piecemeal that piece where we have the core company, and we're going to go add and pull in different pieces. And if one of those pieces don't work, fine, we kick it out and put a new one in. Um,
Wow.
so it ends up being, we've seen it down to 30 employees being really efficient. And it depends. There's lots of different pieces to how it could work, or why it will or will not work. But the idea is, how can we be creative, and a dollar can only do one thing. I always like to use that. You can put the dollar in your pocket. You can use the dollar to spend on something. Let's be as efficient as we can with that dollar.
Yeah, that makes sense. And it's a lot of variety. I think that it opens the door to a different way of looking at insurance, right?
Right.
From the perspective of what level of risk am I willing to carry? What do I have from a cash perspective that I can allocate towards this insurance fund pool idea for your employee benefits program? But that I think it's right fit, right situation, right, for an organization that's looking for something like that. But it's nice that you all have that experience. And when you say next door, you mean literally like on the other side of the wall in the
Yeah,
LaPorte office.
we
Yeah.
go knock on the door and say hi. Yeah.
Yeah, that makes it fun and easy.
Right.
Yeah. So tell me about, we're going to dive a little bit into cyber insurance a little bit more, because that's an area of interest where I think that our organizations have been able to collaborate really well in our specialized program. But navigating those cyber liability issues, how does LaPorte help in this capacity for a business owner? Because a lot of times it's, the business owners, they get the insurance. Well, sometimes it's a rider, sometimes it's a real policy, but navigating the issues, how does your organization jump in and look at that from an evaluation standpoint to understand what's the right package?
Yeah. So our process is pretty intense, where I want to understand the exposure.
Okay.
So a number that I like to use is, it's $230 in fines and penalties per record stolen. Okay.
Mm-hmm.
So that gives you an idea of what the potential top line risk could be. So if you've got employee data, you've got customer data, you've got credit card data, anything like that, if that stuff is lost,
Mm-hmm.
just in fines and penalties, there's a baseline of where we're at. Um,
Okay.
and what I think most business owners don't understand is that number creeps up so dramatically. And when you get into, additionally, a reputation, how do you
Mm-hmm.
repair the reputation, and what's the cost to repair that reputation?
Yeah. Yeah.
Um,
That's a
and
hard number to come up with sometimes.
it's really hard, because it's a perception, right? So depending on how quickly you get in front of it, really dictates, can you control the narrative of what's going to happen and how you're going to be talked about.
Mm-hmm.
You've also got significant risks if you have any kind of production facility, or any of your own kind of code or IP. Well, if I
Mm-hmm.
lose that, what's it cost me to recreate it? I've seen examples of ransomware coming in and locking down entire systems. Well, you're going to pay the $10 million fee to hopefully get your data back, or are we going to pay the $6 million to go recreate the entire system and all the
Yeah.
lost revenue? It's a scary thing, and that is a bummer of insurance. It's kind of like, well, is it a fear-based thing? Well, not necessarily in cyber. It is a, when is something going to happen, and how
Yeah.
bad is it going to be, and then what are we going to do to get you up back and running as quickly as possible?
Yeah. And insurance obviously has a limit, right, of what your coverage will include. And so if things are more expensive than that, we often, in a similar way, use the value of a single customer, right? What's the annualized value of a customer? And should you have 1,000 clients, and say a cyber incident results in 2% of them leaving because they've lost trust or whatever, what does that net revenue number mean to the business as a top line revenue, so that you can kind of understand like why you would be investing into cybersecurity practices and tools and policies and technology to protect the business, in addition to having a cyber insurance policy, because your policy requires you to be doing a bunch of things too, right? So I like that we both use similar ways in calculating the risk posture of an organization, we just sort of attack that solution a little bit differently. You look at it from a policy perspective. We look at it from a tools, technology, prevention, and people perspective. From a consulting services standpoint, can you kind of go over what LaPorte offers from an organizational development standpoint?
Yeah, well, and I just want to touch on one piece that I think is really key that people should understand.
Sure.
It is incredibly valuable to have your MSP and your insurance agent working together because
Yeah.
of that application. If the application, for instance, says, "Do you have MFA
Mm-hmm.
activated on all critical applications?"
Yeah.
Well, that does not just mean Microsoft 365, or that does not just mean your accounting system or your agency system. It can mean your CRM. It can mean
Yeah.
a lot of different pieces. And
Yeah.
so if you're not working hand in hand with your MSP to understand all of those questions and
Mm-hmm.
accurately putting those down, you don't have coverage because the application was incorrect and it will be found out as part of the due diligence of the insurance carrier. So
Yeah.
just want to put that out. Make sure that you are working with that agent and your MSP and that they are aligned of how we're going to
Yep.
get this done.
Yeah. Yeah.
Um, so to your consulting services question, great question. We are unique in that we will provide additional consulting around succession transition planning. So, what does
Mm-hmm.
it look like to sell your business to a management team, sell your business to kids, transfer the business? I like to use the example of the Ford family model, which the Ford family has been able to generate income for that family forever because Henry Ford was very smart in the way that he structured that deal.
Yeah.
Um, we will get involved also in helping businesses obtain capital should they need that.
Okay.
We have outside groups that we partner with to make sure that our clients have cash as they need it,
Mm-hmm.
but also an understanding of why.
Yeah.
Liquidity is king and
Yeah.
all business. It's again to bring back the dollar. A dollar can only do one thing.
Yeah.
And so making sure that we're using those dollars accurately and for the best use of it is something else that we're more than happy to help advise on.
Yeah. Which is something that I don't see a lot of other what you would see traditionally as like insurance with the word insurance in the business name offering and doing.
Yeah,
Most of them are very myopically focused around this is what policies, this is what coverage you need, and then you sort of, move on from there. But being able to come in and actually talk about where an organization is going to go and what the future is going to look like and help plan for that, and then work with the leadership team and or the family to figure out what is the best suited option, as well as just the alternative financing options that you all can explore with an organization. That's something that I think is really different in the industry. I rarely come across an insurance organization that goes beyond just the standard coverage, right? That you're going to use, whether it's benefits or whatever. A lot of them are siloed. We only do, employee benefits. We only
right.
do, general liability and other lines. Lots of them don't have the experience around cyber liability insurance that you all have as well. That depth of understanding and knowledge. One of the other things, though, is that I know because we've been your partner for a while, LaPorte also works with organizations around workers' compensation insurance and what to do for that, how to architect and structure that solution as well. Can you kind of expand on that a little bit and how you all serve and fit that need?
Sure. Well, and to give a little more clarity, with us being an independent agency, we're able
Hmm.
to do things a little bit differently than the big shops, where we're
Okay.
able to say, hey, like I said, I can go right next door to Matt and say, Matt, let's work on this. Let's figure this out. And
Yeah.
go to the other side of this room and go talk to Dan and say, Dan, what are we going to do here?
Yeah.
How do we work on this and how do we do this together?
Hmm.
A team approach is key, especially for any kind of a large multi-state risk.
Yeah.
Around workers' compensation, it's the same gig. Workers' compensation is it is the most controllable line of insurance that exists because it is simply around worker safety. Uh,
Sure.
Most people don't recognize that when you get into the nuances of workers' compensation, there's these things called tiers. And so
Hmm.
tiers are the subjectivity of workers' compensation. So a workers'
Okay.
compensation underwriter will say, hey, based on your risk profile and the different things that you're doing, whether it's safety meetings, trainings, etc. We're going to move you into this tier versus if you didn't provide that information to me, I'm going to keep you in this tier.
Mm-hmm.
We get really in the weeds with the underwriters because we understand what they're looking
Sure.
for, and we will
Yeah.
help develop those plans, develop those procedures to make our clients a better risk so that we can, again, control that premium.
Yeah, that makes sense. And workers' compensation, obviously it's an area where big claims can happen.
Yes,
And you want to keep those as low as possible. And you made a really good point. It's the one area where you have the most ability to impact those claims, right? Through safety programs, safety officers and coordinators, training, etc., of your teams. And I'm sure there's industries, right, where there's a higher risk factor because
oh,
of the type of
100%.
work
Yeah.
being done, right? So you're going to have a hard time getting a really good policy if you're not doing some of those things. In the same light around cyber insurance, if you're not doing, the MFA thing you mentioned on your apps, you're going to be in a higher risk pool. You're going to pay more for that policy.
Absolutely. Yep.
Yeah, yeah. Well, what are some of the outcomes that companies that work with an organization like LaPorte and implement some of the strategies that you all do to help business leaders and owners navigate this space? What are some of those outcomes? What are some of the results that
Yeah.
companies can kind
Well,
of expect?
um, we always shoot for cost savings. That is a
Sure.
goal. But we're not advocates of cutting costs, but cutting coverage at the same time.
Okay.
The goal's always got to be the increase coverage for the same or less.
Mm-hmm.
On the employee benefits, there is a lot more opportunity to cut costs. Uh,
Mm.
again, because of the overhead that's built into those plans. It's just an understood, this is what we can do.
And
Uh,
that's on the self-insured model
mhm.
that you brought up
And
where you can kind of
doing,
think about that.
yeah,
Yeah.
doing partially, even partially self-insured. There are lots of different ways to do it. It's kind of like the appetizer before the entree of the.
Okay.
Um, but in the workers' comp, our goal is, and I could show, I built this graph that says, hey, we want to go up and to the left, and up and to the left is moving the tiers and lowering the cost.
Okay.
The mod is not the only factor within a workers' compensation plan. So when you get into weeds and you get into the conversations with the underwriters, it's a lot easier to explain, well, no, they don't have this risk. And because we have a large book, we're able to say, well, this client does the exact same things, same risk profile. They're in this class. We expect them to also be there. Uh,
Yeah. Use
so
the data that you have,
yeah,
right? Yeah,
yeah,
that makes sense. I mean, it's at your fingertips, right? As an agency to be able to do that and use the pool of customers already working with you to say this should look more similar to what their plan and their policy is structured like.
right.
Because you know that. Yeah, that's really interesting. I love that. Well, last question for this episode. And so we'll go into the cyber liability expertise in our second episode with y'all. But what are some of the things you look for, right? You talked about, well, we look for savings, but what are you evaluating to find potential savings when you're working with an organization? What are some of those indicators, I guess?
Yeah. Well, it can be everything from being mislabeled on the payroll, so the wrong class code. I see
Okay.
frequently, where they're not using the right class code for certain things. Well, I've also seen it around building protection, building updates where the property coverage is higher than should be because the underwriter's not aware of something different that has occurred.
Okay.
Um, so what we really like to do is understand the business from what makes the business tick
Mm-hmm.
and the entrepreneur mind of the business owner. An
Mm-hmm.
entrepreneur takes risk every single day.
Mm-hmm.
So, and you have self-insurance risks, whether you know it or not. It's everything from your deductible to the pieces of their business that there isn't commercially available insurance for. So
Sure.
it's really important to have a conversation and understand what's the risk tolerance, where are we at, uh,
Mm-hmm.
and is there a business decision to be made around changing those kind of things.
Yeah. Yeah. Interesting. Okay. So you all will model it out. and make sure that it, each box sort of has something describing what makes sense and what the factors are. Well, if you go up, in your risk tolerance, then your premium does this. If you go down in your risk tolerance, your premium goes up a little bit, and sort of pulling on those levers. I love that. And I think it gives a business owner the opportunity to make the choice also,
Yes.
right? Of where they are comfortable. How much cash do you carry? How much are you willing to, you know, um, I guess, a little bit of a roll of the dice. How comfortable are you with that, right? Well, Zeb, this has been super helpful. Really interesting topics and stuff for the folks to learn that are watching and listening. And that'll wrap our first episode with LaPorte on insurance for businesses. Thanks everybody for watching, and we'll do a second episode to catch up on go deeper into cyber liability insurance next round. Have a good one. Thanks again. Take care.